I knew this was coming. There were warnings.
Japan has now overtaken China as top bag holder of U.S. debt. Official figures from the U.S. Treasury Department put Japan at owning $700 million more than China, who reduced their holdings over $15 billion to $1.2 trillion as of February 2015. With the president's proposed 2016 budget not to balance ever, and the House budget not to eliminate the deficit for 9 years, the United States must seek new ways to finance debt. A scenario that is all but impossible. Unfunded liabilities further compound the problem. The Social Security Disability Insurance Trust Fund is expected to go bankrupt by 2016, and some have suggested diverting funds from the Old Age Survivors Insurance, which has a later bankruptcy timeline of 2034. In the oil market, Saudi output jumped over 500,000 barrels per day in March. But because the dollar index shook lower, oil sprang up to over $56 on the WTI index. A correction is likely due. Expect more U.S. wells to shut down throughout 2015 and perhaps 2016. OPEC production is up 2 million barrels year over year. A cut by OPEC now would be in the category of a black swan event. Last week, we reported that Greece made the IMF payment, but they're not out of the water even for April. They owe $1 billion in T-bills today and €2 billion in euros to public sector wages and pensions, all due by the end of the month. By June, they have nearly €3 billion in IMF payments due, and the Greek 3-year bonds have reached a 28% yield compared to just 10% 4 months ago. In end of the petrodollar news, the China-led Asian Infrastructure Investment Bank, the AIIB, has approved 57 countries as founding members. This includes major U.S. allies like Australia, France, Saudi Arabia, and the United Kingdom. The bank is expected to be established by the end of the year. For more on the end of the US dollar as world reserve currency, watch our powerful video,
King Dollar is truly dying. In addition to this, less US oil imports means less dollars going abroad, which means more dollars are coming back inside the United States. This will inevitably cause additional inflation that's been overdue, as America's money supply has more than doubled in the last 10 years.